through the calculations for how to create a sustainable energy civilization.
Over 80% of global energy, primary energy, comes from fossil fuels, and only 1/3 of that global energy actually ends up delivering useful work or heat. Total energy use halves. So this is one of the most enabling aspects of electrifying everything, is that the sustainable energy economy is that much easier to accomplish. It's actually half the problem statement of the fossil fuel economy. How the master plan works. You want to talk about?
The thing that is needed at very large scale that is not currently present is a vast amount of battery energy storage. Our rough calculations are that this is about 240 terawatt hours, or 240,000 gigawatt hours. So if you've got solar or wind, you've got to store the energy when the wind is not blowing, the sun is not shining. And so we're assuming sort of an 8-to-1 ratio of stored energy to power. So 30 terawatt hours of power, 30 terawatts of power. Our capital expenditure calculation for manufacturing investment is more like 6 trillion, but we made it higher to make it 10 trillion. Not a big number relative to the global economy. As Drew mentioned, you need about half as much energy with an electric economy versus a combustion economy. And in terms of wind and solar, how much land would be used? It's less than 0.2% of the land area of Earth. The electrified economy will require less mining than the current economy does.
Now we'll get into a little bit more of the details of the plan. Basically, 5 areas of work. First, renewable power, the existing grid. Second, switch to electric vehicles. Third, switch homes, businesses, and industry heating to heat pumps. Fourth, high-temp heat delivery and storage for high-temp industrial and chemical processes, and a little bit of green hydrogen in there for chemical processes that need hydrogen. And finally, sustainably fuel planes and boats. First, repowering the existing grid with renewables. And this is going to be a consistent theme. You'll see our estimates for the number of terawatt hours, terawatts, and trillions of investment at the bottom of the page. Second, switching to electric vehicles. Again, 21% reduction in fossil fuel use by doing this alone. Obviously, Tesla is heavily engaged in this activity, along with many others. Just rough view from our perspective. Of course, we could be wrong, but you can see the sort of breakdown of the fleet by millions of vehicles. Our goal is to do 20 million electric vehicles a year. Next, switching to heat pumps in homes, businesses, and industry. Right now, heat pumps meet 10% of building heating needs. Install rates growing 10% year on year. It really needs to accelerate. Heat pumps can serve, heat applications up to 200 C in businesses and industry. And from an investment perspective, as you can see on this page, this is actually the lowest hanging fruit in terms of displacing fossil fuels. Next, a little bit more detail on electrifying high-temp sort of industrial chemical processes. So over 50% of industrial heat is greater than 400 C. Cement, steel, fertilizers, chemicals, plastics, metals refining all need like 1500 C, so we need a solution here. On the hydrogen side, we also need green hydrogen to decarbonize metals and chemical refining processes. This is things like ammonia, making steel. There's roughly 120 million tons of hydrogen sourced from fossil fuel today to do these things. And hydrogen can also directly replace coal, which is currently used in a ton of steel production, through a process called directly reducing iron. You can replace blast furnaces with a hydrogen-reducing direct reduced iron furnace. And this is the way to eliminate fossil fuels from these aspects of the economy. And lastly, a small part of the pie, but a necessary part of the pie, is sustainably fueling planes and boats. Shipping accounts for 3% of global CO2. It's ripe for electrification. Even with lithium iron phosphate, long-haul ships can be fully battery-powered. So that's a great opportunity to electrify. Energy density is a little bit harder for planes, but short-haul is doable today. With some improvements, we'll get long-haul underway. But even in the meantime, we can leverage sustainable aviation fuels produced and stored using excess renewable electricity. So when we stack up all of these efforts, we end up with the numbers we shared at the beginning of the presentation. 30 terawatts, 240 terawatt hours, $10 trillion. And you may be saying, I need some context. Is this feasible? Spoiler alert, it's entirely feasible. Just looking at it from a growth rate growth rate perspective, how much do we need to grow the deployment of these technologies? We're talking about only a 3x growth rate in solar and wind deployment. When we look at the electric vehicles, they have to grow 11x. Well, they grew 60% year on year last year. That growth rate is also going to close pretty darn. That gap is going to close pretty quickly as well. And lastly, storage. Tesla's energy storage business has grown at 65% CAGR since 2016. The global energy storage business is accelerating pace as well. I mean, all these gaps are going to close, especially as this momentum of the transition to sustainable energy accelerates. And of course, our goal on this page is 20 million EVs per year and 1 terawatt hour of stationary storage per year. So in the end, a sustainable energy economy is within our reach, and we should accelerate it.
So when you think about what I'm trying to say, I really want to hammer this home. When you have a car that's about 5 meters long, and you have people working around it like we did in Model 3, and we change that to this process where we take different parts of the car, and we can do more at the same time, like we did with the Model Y structural battery pack. What you see here is us doing that on the front part of the vehicle, or the rear part of the vehicle. That means we can get more people working on the car, or robots, working on it at the same time. That means we have better operator density, less time doing nothing. We get 44% more operator density, which means more work, less time walking back to the station, 30% improvement in space-time efficiency. And because we're not building it in and out of the car with those slow movements of those robots I showed you from production hell, when we go to automate it, it's going to be a lot easier. And what that means, it's going to look something like this, where we build all the sides of the cars independently. We only paint what we need to, and then we assemble the parts of the car once and only once. We put them where they need to go. The interior is attached from a bottom-up or a top-down strategy, so there's more access for those robots and people. We aren't moving heavy objects around and doing nothing to it, and it means we're doing more work on the car more of the time. And then when we take all of these tested sub-assemblies and we put them together, we finally assemble the car only one time, putting the sides on with all of their parts to a front and rear that was already assembled, carrying the floor in with the seats, and finally boxing it out with the doors one time, just like Cybertruck. In the end, what does that mean? To increase the scale and adoption of electric vehicles on the orders of magnitude that we just showed you, we have to make constraints part of the solution. It leads us to greater than 40% reduction in footprint, which means we can build factories faster, with less CapEx and more output per unit.
Thank you, Franz. My name is Colin Campbell, and I have the real privilege of leading powertrain engineering here at Tesla. And the powertrain factory, which is behind me today, is 75% smaller and 65% cheaper than the one that we originally built. In our next powertrain, so those silicon carbide transistors that I mentioned that are key component but expensive, we figured out a way to use 75% less without compromising the performance or the efficiency of the car. And of course, we know that battery cell supply is one of the constraints on the scalability of EVs right now. Our new powertrain is compatible with any battery chemistry. And that will give us great flexibility in battery sourcing.
Good afternoon, everybody, and welcome to Texas. For Cybertruck, we are now designing 85% of the controllers in the car. For the next-gen platform, we're going to finish the job and be designing 100% of the controllers to give us full control of the design and the supply chain at the component level.
Thanks, David and Pete. Hey, everyone. My name is Ashok Keliswamy. I work on autopilot and self-driving. Like I mentioned earlier, the solution to scalable FSD is getting the AI architecture, the data, and the compute just right. And we have assembled a world-class team to execute on this. We are pushing the frontier on these three items, and as we improve the safety, the reliability, and the comfort of our system, we can then unlock driverless operations, which then makes the car be used way more than what it is used right now. With that, I'd like to introduce Elon back on stage to give some more updates.
It's kind of weird seeing the arms and legs just separate. Worth bearing in mind that when we did AI Day, this version of Optimus didn't walk at all. So the rate of improvement here, I think, is quite significant. We have the real-world AI. We're the most advanced in real-world AI.
Hi there. My name is Rebecca Tanucci, and I lead our charging infrastructure teams here at Tesla. Recently, we have started opening up our networks on a global basis. Over 50% of our superchargers in Europe are currently open to other electric vehicles. We've also opened up in Asia Pacific with our first sites in Australia. And just yesterday, we opened our first 10 supercharger sites here in North America and the US to other electric vehicles. We've also just started installing our 4th generation supercharger posts. Those are being installed in Europe first. And while it's not a big mention, not a big thing to mention, they do have longer charging cables so that we can more easily reach the charge ports of different vehicles.
Hi, my name is Karn, and my team leads supply chain for electronics, powertrain, and battery at Tesla.
So the question gets asked, is Tesla going to basically break the chip industry if we grow to 20 million vehicles? The answer is no.
So in a line that would need 1,000 associates to build the super manifold in full volume now just takes 10 associates.
Hi, everyone. My name is Tom Zhu. I'm now responsible for global production and sales and delivery service. I joined the company back in 2014, and I've been running the company's business in Greater China and APAC. Today, I'm representing all the gigafactories and talk about how we can make more cars and faster. Look at the chart on the left. Shanghai be able to significantly drop our labor hours per car during the ramp. The little dip there has happened in the last Q2 2022 because of the COVID shutdown. And on the right is the Fremont Model Y shop. Even this is a 60-year-old facility, the team there still be able to optimize the material flow, eliminate all the single point of failure, and drive higher output, hence reduce the labor hours. And actually, this factory keeps setting a new record. Yesterday, they just had a new factory daily record.
And we've also continued to focus on refining the way we make cells and the factories that the cells go inside. As you can see on this chart, from typical 2170 cylindrical cells to 4680, we made a huge leap, which is basically a 5x reduction in the factory footprint and volume and footprint. And then from going from what we did in Fremont and our pilot line to Texas, we improved further, and we're improving again when we go into Nevada. And we're not just looking at the cell factory itself, but also upstream materials where necessary. What you see here is the rendering of the 50 gigawatt hour a year Corpus Christi lithium refinery that we've already broken ground on here in Texas. The facility will start commissioning by the end of 2023, this year. Mike, you want to come up and we'll talk about energy?
We're on our 6th generation of our industrial product, which is the Megapack XL that we're building out of Lathrop, California. We've deployed over 16 gigawatt hours of industrial and residential products across 50 countries. And really, Megapack is a market leader. It's best in class in efficiency, reliability, energy density, and easiest to install, lowest cost to install.
So this is our last section of our prepared remarks today. If we look at our longest running scale production product, this is the Model 3. We reached 5,000 cars per week, which was our design capacity in mid-2018. And since then, we've taken 30% of cost out of this product. Cost reduction doesn't just come from one place. There's no silver bullet here. And as we look forward to our next-gen vehicle, our target is to reduce 50% of cost, and we've talked about that a bit earlier today. Going from the Model S and X platform to the 3 and Y platform, we took out 50% of cost, so the task here is to do it again. And this is very important because as we improve affordability, the number of customers who have access to our products dramatically increases. And as we link this back to our master plan, it enables an exponential growth in our volume with linear reductions in the cost of our products. The second point I'll make here is that, and again, cost reductions don't come from any single one place. But more importantly than just the cost of the car up front, this chart here is showing what the total cost of ownership per mile is over the course of 5 years. And we have to think about financing costs, insurance costs, the cost of power, Drew talked a little bit about that with the plants that we're doing in Texas, wear and tear and maintenance on the cars, et cetera. And we're already at a place today in the US where a base Model 3 on a cost per mile basis is less than a Toyota Corolla, which is the highest selling car in the world. The next thing on cost reduction I want to talk about is operating expenses. We spend a lot of time on our earnings calls talking about gross margins and product cost. We don't spend a lot of time talking about OpEx, but I think this is one of the really important parts of our story. So since 2018, we've reduced our non-GAAP OpEx 60% as a percent of revenue and 75% on a per delivered car basis. This is quite staggering. If we look at the SG&A side of this, I think the story here is pretty dramatic. So we're showing here a comparison of SG&A per car delivered compared to the traditional auto industry, which is both an OEM and the dealership network. And our estimates are that we're 60 to 70% lower on a per car basis. And if you turn this into dollars, this is many thousands of dollars per car. So to wrap up the finance portion of the presentation today, a couple of key messages I just want to leave you all with here is that we use innovation at an intense level to drive costs down and improve the efficiency of the business. And the reason this is so important is it allows us to improve product affordability. And this is particularly the case when we move to our next generation platform. Improving affordability allows us to comfortably make investments that grow volume. That volume generates cash that then allows us to make more investments. And as we integrate that going forward, it's our belief as a leadership team here at Tesla that we're going to achieve unprecedented scale in the manufacturing space. And this is what's ultimately required to accelerate the world's transition to sustainable energy. Thank you all very much.